Bitcoin is historically highly correlated with various liquidity indicators, right? So basically, how much capital is kind of available, liquid for investment. A lot of other investments, they trade off things like earnings, they trade off all sorts of other things, whereas Bitcoin is actually one of the purest liquidity correlations that are out there. And ever since autumn of last year, liquidity conditions have actually been, in many cases, moving up or sideways a little bit. Basically, they declined all throughout 2022. When you got to the end of the year, the dollar index came off of its highs. You started to get Chinese reopening. You started to get, the market pricing in slower forward Fed hiking. Inflation was off of its highs. You had a drawdown in the Treasury General account. It's kind of jargon for some, but basically there's a bunch of things that improved liquidity. And I actually think that, Bitcoin probably would have bounced in Q4 if not for the whole FTX, implosion. Because you started to see a bounce in a number of risk assets. We saw good movements in precious metals, including ones like silver, that are historically more cyclical. And so I think that basically this is kind of a pent up move from those overall better liquidity conditions. I think the somewhat concerning thing is that you're also seeing a bounce in like meme stocks and unprofitable stocks this year. And so, I wouldn't be surprised to see some of this be given back, or some of this, consolidate for a period of time. But essentially, I think that, liquidity, at least locally, reached its worst point last year, and at least is kind of a mild, improvement.
As the crypto market continues to soar, renowned macro analyst and investor Lyn Alden recently sat down with the Paul Barron Network to offer her expert perspective on the current Bitcoin rally. According to Lyn, Bitcoin is on the brink of outperforming traditional stocks such as Tesla and Apple in the immediate future. Despite the uncertainty surrounding the crypto market, Lyn asserts that we are in the final stages of reaching the bottom, and that with the right conditions, a bull run is imminent. Bitcoin has seen an impressive rally with over an 11% rise in the past 7 days, yet it still struggles to break through the crucial levels that bulls are eagerly aiming for. The key factor in determining the success of Bitcoin, according to Alden, is its correlation with liquidity. With an influx of liquidity, the crypto market can reach new heights, and Bitcoin will be at the forefront of this new era of growth, ready to spark the next bull run. Here's more of what Lyn had to say. But before we do that, if you like finance videos, please support our channel by liking the video, subscribing, and dropping your questions or comments below.
So in equity markets, a lot of the margin debt has been rolled over, right? So basically, there was, during the big spike and into 2021, there's quite a lot of margin debt. A lot of that has been reduced, and obviously, we've seen a lot of debt implosions throughout the whole crypto ecosystem. That was basically debt built on debt in this big intertwined connection. So I think that's actually pretty healthy. I think there's still some pockets of debt. Obviously, we have to see what's going to happen with digital currency group and that full situation there. So it's not like debt has been totally wiped out, and it's never, in recessions, you don't wipe out all debt from any industry. You just kind of wipe out the excessive debt around the margins. And so I do think that it is a much better debt situation than it was before, at least in that market sense, right? So there's still tremendous amounts of debt. For example, sovereign debt, corporate debt, household debt. But in a market sense, basically debt tied to trading assets, that's been significantly reduced.
Right.
I think the biggest way it affects Bitcoin is how it affects their Grayscale trust, right? If this allows for redemptions, if this allows for a changing of ownership, if this gets stuck in a bankruptcy court for a period of time, I think that's the biggest impact there, because GPT is an absolutely massive holder of Bitcoin. More broadly, basically, I mean, they own large amounts of venture positions throughout the crypto ecosystem. Obviously, they're a major trading desk. But I think it's healthy to go through these cycles and clear out all these malinvestments, because if you just always go up, of course you're going to get more and more leverage piled up. If you saw an investment that only ever goes up, the rational thing to do would be to leverage, right? If you were sure that it was only going to go up. And so the only way that something can go up structurally is that it has to clear out a lot of that debt every once in a while. And so basically, I think we still have a process to go through. If you look at historical Bitcoin bottoms, they usually, other than the March 2020 event, usually you don't have these V bottoms. Usually you go down, you crash, you capitulate, you go sideways for a while, and you correct both in space and time, and you clear all that out for a while, and then you start to build, right? So I do think that even though we potentially have seen the lows, I still think there's time to go through before you'd see another just super strong kind of structural rally to new all-time highs. So a lot of people focus on, for example, Bitcoin Twitter, which they
Right.
might mistakenly assume that's all of Bitcoin, whereas of course
Mhm.
that's the more vocal public group. Whereas if you look at the developers, a lot of them, they don't have time for Twitter. They're only
Right.
marginally on Twitter in many cases, and a lot of times they have very different views from the rest of the space. So I think there are pockets of Bitcoin where, if you're an intellectually honest person, I mean, you can fit in many different places. I think it's a very
Mhm.
inclusive space in that sense. The way I would phrase the parts that seem rough around the edges is that on average the community is like very open and aggressive about calling out things that they perceive as scams. And I think that
Yeah.
unfortunately this ecosystem's been kind of ripe for scams because the way I phrased it before is that by allowing peer-to-peer money, the same technology that allows for peer-to-peer money also accelerates peer-to-peer scams, right? So
Sure.
for example, before, if you wanted to scam people, it was like direct mail, things like that. If you wanted to go through investment opportunities, generally that the SEC would be some degree of a barrier. If you want to get someone into penny stocks or things like that, you're still going through the SEC in some way. Whereas this technology is allowed for security basically to be sold to the public in a way that goes around a lot of those other historic safeguards. And I think there's a lot of active debate, I mean, whether those safeguards were ever really effective.
Mhm.
But because this technology kind of, at least temporarily, in this kind of arbitrage, like regulatory gray zone at the moment, because they kind of go around those, it's sort of a haven for scammers, even though of
Yeah.
course there are plenty of people that are doing plenty of interesting things in encryption. There are a lot of serious people in the space, but because it's such a haven, there's so much affinity scamming, there's so much pump and dump schemes and things like that. And so I actually think I do think it's good to pay attention to a lot of the people that might seem closed-minded, because a lot of those have been through multiple cycles and have seen a lot of these before.
Sure.
So
Yeah.
I do think you have to balance a little bit, but I do think that it's a reasonable heuristic to have a very, very high bar in this space before you'd consider something investable. I
Totally.
think it's, yeah, you want to be open-minded, but you also want to be very, very on the lookout for scams, and kind of start with the assumption that most of the thousands of things out there, unfortunately, are scams.
Thank you for watching our video. For more finance content, don't forget to like the video and subscribe to the channel. And remember, when in doubt, just hodl.